Hey, Do. Great to be here. As you know, we're huge fans of what you're building with Terra. I think it's one of the most important and kind of underrated protocols in crypto. Before we start, and just for full disclosures, Delphi Ventures, which I'm a part of, holds a position in Luna, and Delphi Labs, which I'm leading, is also actively incubating projects on Terra. So for today's interview, I'd like to try and take a first principles approach to explaining both the stablecoin market and its importance, and then also why decentralized stablecoins matter, and go into Luna's design a bit and kind of explain why I think we both believe it's the only truly decentralized stablecoin out there. So with all that out of the way, before we get into the meat of this interview, could you give the listeners just a quick summary of your background and how you got into crypto?
So I'm a software engineer by trade, and my first job out of college was working in sort of NLP at Microsoft, but there wasn't a whole lot for me to do, as in the work culture was pretty chill. So I spent a lot of time like working on side projects until I sort of fell down the rabbit hole into working on Wi-Fi mesh. So I developed software for users' mobile phones and laptops to connect to each other over Wi-Fi direct and Bluetooth. So the idea was that even if you don't have direct internet connectivity through LTE or Wi-Fi, you could hop through a network of other users around you to get free access to the internet. So we packaged that as like a B2B SDK, sort of like a turnkey solution, including backhaul and routers and stuff like that to large venues like amusement parks or shopping malls. And while I was running that business, if you search, distributed networks, a lot of the adjacent search queries are regarding Bitcoin and Ethereum and things like that. And then, I found myself getting sucked more and more into crypto until I finally sort of pulled the trigger and then jumped full time into working on Terra in 2017.
That's awesome. And how did you come up with the idea for Terra, out of curiosity? Like, how long did you spend sort of looking around, and how did you settle on that?
Back when I was first getting into crypto, there were kind of, shall we say, technically novel projects that were being built on top of, blockchain technology, but none of them were actually actively being used. So if you remember, like the tenor of the projects in 2021 and 2017 are really different. A lot of the focus of the project was around the white paper, where you sort of outline really complicated technical concepts, and then you try to build it out over 3 to 4 years. But the problem was that none of these things were actively being used. And then I decided that what was interesting about crypto is that while you have these assets that can perform certain niches very well, the big barrier to adoption of crypto was that there was no cryptocurrencies, as in there's no versions of crypto that can be used in the form of money over payments, savings, and different things like that. So I felt like a stablecoin would find perfect product market fit to be able to retain all the benefits of other cryptocurrencies, while at the same time, holding value as so that users can use it as they use different fiat currencies like USD.
Yeah, you were definitely right about that intuition. And I guess to begin with, could you define what a stablecoin is for listeners and what people use it for in crypto?
So stablecoins are cryptocurrencies that retain value against fiat currency, like let's say the USD or the Korean won. And the value of this is that while you maintain all the permissionless properties of Bitcoin, you can send it freely across borders. You maintain asset sovereignty. You can program on top of it to build different types of smart contracts. It still maintains value against your main unit denomination. So if you live in the US, that could be USD. It could be a different fiat currency if you live somewhere else. So the main benefit of this is that given that humans are psychologically wired to understand their net worth and denominate value in fiat currency, it becomes much easier to use as a medium of exchange and store value versus something like Bitcoin, where the value fluctuates quite wildly, like even in the course of a single day, which makes it very difficult to use in everyday transactions.
Okay. And for people who don't follow crypto markets closely, could you give like a summary of the traction that stablecoins have achieved? Because I think many would argue that stablecoins are probably crypto's killer app right now, just in terms of the traction they've achieved. So could you give like some stats or some illustration of that?
Similar to how there's lots of different companies on the NASDAQ and all of them are creating lots of value. But the biggest, shall we say, economic tool in the US economy is the US dollar. And it's quite similar in crypto, where stablecoins probably have the highest transaction volume, the largest number of users, the most use cases built on top of them than any other sector in the cryptocurrency space. So for example, there's over $100 billion in stablecoins outstanding today, with USDT, Tether leading. There's more transactions on top of stablecoins than any other asset in the world, including Bitcoin.
Yeah, that's insane. Yeah, I think at this point there's probably trillions of dollars of transactions being settled in stablecoins every year, which is kind of insane. And like, how have they achieved this much traction? You kind of hinted at it earlier, but what are people like? Why are people moving their fiat to stablecoins, and like what are they doing with these stablecoins?
I think it's similar to how while gold is really valuable or single stocks are really valuable, most of the use cases that constitutes traditional economies is over the US dollar. And that's because while Bitcoin can be, let's say, a great investment, it's really hard to use it for everyday transactions. So for example, if you wanted to pay salaries in Bitcoin, there's always this horror story going around on crypto Twitter about how you paid, like 90 Bitcoin for a single slice of pizza or something like that, right? Or let's say, and for one-off transactions, that might be okay. But this gets much, much worse when the transaction is over a long period of time. So imagine like signing an employment contract with the salary being denominated in Bitcoin. Then it's almost impossible to enforce that over time, because if Bitcoin's price goes up, the company goes bankrupt because it has to overpay. And then if the value falls too much, then the employee starves. So one of the reasons why stablecoins have found so much traction is because there's the lowest psychological barrier in people that were participating in economies that are denominated in the US dollar. And then they can do the same thing while crossing over into crypto. So they can reason about in an asset that can be used for everyday payments. It can be used to denominate their earnings. And then on top of that, they can constitute brand new economies and tools and applications on top of it, from lending to payments to these weird little quirky DeFi apps that just don't exist in traditional finance.
Yeah, no, that's a huge part of this, because sort of everyone I introduce to crypto starts off with sort of single digit percentages of their net worth in crypto. And like over a very short amount of time, that sort of increases. And even sort of their fiat gets absorbed into stablecoins, right? And most of my friends I speak to, they see them as these like hyper useful like fiat currencies, right? You can send permissionlessly. Your bank isn't going to call you because you did a transfer over X amount. You can earn like yield on them, lend it out. You can buy stuff with it. So I think, but yeah, part of it is just they're much more useful dollars as well. So yeah, and now that we kind of understand like the traction of stablecoins and why they're used, could you go into a bit of the sort of high level architecture? So like centralized versus decentralized stablecoins and like the state of the market right now?
The core to a stablecoin mechanism is that you have a cryptocurrency that maintains value against the fiat currency. So there's multiple different models by which projects achieve this. So the most popular variant so far is the centralized stablecoin. And what that means is that essentially you have these crypto banks. They take $1, a USD over wire, and keep it in like a bank account. And then they issue you an IOU, which is a stablecoin like USDC or Tether. You can redeem the dollar supposedly by giving back the IOU to the issuer, and then you can get the dollar back in return. This doesn't get widely used in practice. So usually how these assets maintain value is through market making using the underlying bank treasuries. The second model is crypto collateralized. And this model is basically the idea that instead of keeping $1 in the bank account, we're going to keep more than $1 of some volatile crypto collateral. It could be Bitcoin, it can be Ethereum, it can be any other type of volatile cryptocurrency. But given that the underlying collateral is volatile, you have to use over collateralization. So instead of keeping $1 worth of ETH to issue one DAI, you have to keep, let's say, $1.5 worth, and then use margin calls and liquidations to buy back supplies of stablecoins if collateral value were to fall. And the third variant of stablecoins is algorithmic, which means that it uses a set of incentives that is natively baked into the protocol to stabilize the stablecoin's value over time. The third variant is not collateralized. There's no explicit value backing any of these coins, but at the same time, that gives it the freedom to be more decentralized and, shall we say, permissionless.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.